Hey everyone, welcome to The Explainer. So, if you've ever stared at a price chart and just felt, completely overwhelmed by complex indicators, lagging averages, and a whole barrage of chaotic noise that literally looks more like modern art than financial data, well, you are absolutely in the right place. Today, we're stripping all of that away. We're looking at a deeply structured, rule-based approach to the markets, straight from our latest source material. It's a system that's all about discipline, visual clarity, and just keeping things incredibly straightforward. Now, this source material we're breaking down today makes a bold, but honestly really refreshing claim. It describes this strategy quite literally as a very simple method to trade the market. And, that is exactly what we love to see. Successful technical analysis doesn't always have to require an advanced degree in math or dozens of overlapping lines on your screen. Sometimes the absolute best strategies are the ones that just give you clear, uncompromising visual boundaries.
All right, section 1, the setup. Nifty 15-minute chart. Let's get right into it.
Okay, let's dive into this. Every good rulebook needs a defined playing field, right? Up in the top left corner, you'll notice our operating time frame. It's set to 15-minute intervals. Now, this pacing is highly intentional. It gives us just enough time to filter out all that chaotic minute-by-minute market noise while still capturing the real actionable intraday momentum. Now, scanning across the price action, the core visual elements are those two distinct horizontal lines drawn directly over the candles. You've got the upper green line, which represents our designated buy zone, and the lower red line, which represents our sell zone. These are the strict borders of our trading landscape. Moving on to section 2, the core rules, binary action. So we've seen the board, but now we need to know exactly how to play the game. In trading, hesitation is exactly what costs you capital. Well, this method brilliantly eliminates that hesitation through pure if-then logic. The rules are definitively split. If a candle crosses the green line, then you buy. Versus if a candle closes for the red line, then you sell. There's literally no gray area here, no second guessing. It's completely binary, decisive, and exceptionally clear. You are simply waiting for the price to interact with those predetermined levels. And this brilliantly illustrates exactly how that logic plays out in real time. Notice the exact points where the candlesticks physically interact with our lines. If you look closely on the right side, at that really strong bearish candle plummeting downward and breaching the red line, well, that interaction is your definitive trigger. When the price action breaches these boundaries, the system dictates that you execute based on that simple if-then protocol we just talked about.
Okay, section 3, the exception, preserving capital.
So, knowing when to enter a trade is obviously important, but knowing when absolutely not to trade, that is what actually preserves your capital over the long run. Because let's face it, no indicator is 100% perfect. Markets are infamous for throwing head fakes and false signals that are deliberately designed to trap eager traders. So, with a system this mechanically simple, what actually happens when the market tries to trick you? When exactly should you not take an entry, even if the price is actively touching or crossing those lines?
Now, what's really interesting about this slide is the visual twist right in the middle of the price action. You see that green candle right there actively attempting to cross our upper green buy line? According to our core rule from a minute ago, this should be a trigger to buy, right? But look at the text painted directly onto the body of that candlestick. It clearly says, careful. The indicator actually recognizes a false signal or an underlying lack of true momentum, and it literally slaps a visual warning label right onto the price action for you. And here is the exact uncompromising rules straight from our source text. If any candle crossing the green or red lines with this message, we ignore the trade. Notice how incredibly definitive that is. We ignore the trade entirely. It takes a massive amount of psychological discipline to see the price crossing a line, feel that intense urge to jump in, but instead, you see that careful message, you sit on your hands, and you just walk away. But honestly, that right there is the mark of a disciplined, professional approach. Which brings us to section 4, risk management, setting your boundaries.
So what happens once you're actually in a live trade? Let's talk about our ultimate safety net based on the source's methodology, the stop loss. In this simple method, the stop loss is your absolute safety boundary, and its placement is strictly mechanical. The rule is that it's always set at the triggering candle's high or low dynamically based on whether it's a sell or a buy trade. If you buy the green cross, your stop loss goes exactly at the low of that specific triggering candle. If you sell the red cross, your stop loss sits strictly at the high of that candle. It's not just a suggestion, guys, or a mental note. It is a rigid structural rule designed to cut your losses immediately if the momentum fails to follow through.
Finally, section 5, the complete checklist.
Let's pull all of the source material together into one cohesive, rapid-fire summary. So the crucial point is following this precise four-step sequence. Step 1, wait patiently for the Nifty 15-minute candle to interact with the green or red crossover lines. Step 2, strictly inspect that specific candle for the visual careful warning message. Step 3, if there's no warning message, confidently enter the trade based on those binary if-then rules. And step 4, immediately upon entry, physically set your stop loss at the candle's high or low to protect your capital. It really is an elegant, closed-loop system that leaves absolutely no room for guesswork.
And that brings us to our final thought for today's explainer. The mechanics of this are undeniably straightforward. You have the simple rules laid out perfectly right here. But trading isn't just about reading charts. It's really about mastering yourself. Do you have the internal discipline to honor that careful warning when your emotions and the moving prices are just screaming at you to click buy? That is the real test of a trader. Think about that psychological boundary the next time you open your charts. Thanks so much for joining me to break this down, and keep learning.